Hey guys, I believe you guys can hear me, right? We're getting started in a minute. Um, I know we're supposed to start by 10, so I'm just, chilling for some other people who will be joining us anytime soon. So, I just hope you guys can hear me as well. If you can hear me, just let me know, all right? Okay. You guys can hear me loud and clear, right?
Yep.
All right, cool. It's very funny. I'm seeing in the chat some people were saying, "Who's Derek?" And I'm like, okay, so you don't even know who sent you the link. You don't even know who the person is. Okay. And then I'm saying Tony. I don't even know who Tony is. Oh, so my link was sent to a free public chat. Okay, now I get it. Okay. All right, that's fine. That's cool. Oh, so you don't know who I am. Okay, now I get it. All right. Okay, so I'm just gonna drop in my, Telegram. So if you want to know who Derek is, let's check it out. All right. All right, guys. So you guys are welcome to tonight's call. Um, I just wanted to, just do something for the public chat. So that because I know that the people who joined the channel and most of the people who join, some of them do not really understand. Some are still newbies, and not a lot of things you see might make a lot more sense or be too helpful because you don't really know what I'm doing. Because I'm not really, you know, pointing it out. But there are times when I send out in a way that it makes sense anyway for those who are able to understand stuff a lot quicker. But then there are others. So I'm like, okay, you know what? I'm gonna do a call like this just so I show you guys my method based approach to the market. How do I approach the market? How do I, hop on the chart, look at the market and read price? Okay. So that's literally why the call was arranged. So um, I'll be showing you guys in a minute how, do what I do. So first off, I wanted to begin with the dollar index. I just wanted to use it because I know it's um, the world currency index anyways, since dollars like, the world power and all that kind of shit. So I wanted to just, use US dollar index for an example, because I know it could help you with EU, GU, AU, and the rest of them, USD card, blah, blah, blah. So I'm going to use this one to explain it. So the way I trade, my method, you know, I trade using supply and demand. Okay. And then I pay attention to structure and liquidity. Okay. That's not complete. Attention to structure, dimension, and liquidity. So that's literally all I do. That's how I trade, literally. Um, I trade using supply and demand, and I also pay attention to structure, momentum, and liquidity. So I don't know if a lot of people who are on this call understand how to read supply and demand zones or how to, find them out and all of this kind of stuff. But you're going to be seeing me marking out something specific anytime I'm trying to look out for supply or demand. You know, there are two specific things I always apply by by picking out my supply and demand zones. Now, the first one is it has to take out liquidity and create structure. And then the next one is it has to break. If it breaks structure, it is valid. So it's either one of these two things. Either it breaks structure or it creates structure. Okay? It's either it's breaking structure or it is creating structure. So anywhere that structure is created, there's either a supply or demand zone there. And anywhere that structure is broken, there's also a supply or demand zone there. Does that make any sense? Okay, so those are the two specific things I look out for. I'll repeat myself. Now, how do I identify supply and demand zones? Here's how I do it. Okay, my zones have to respect two rules. One, it has to take out liquidity and create structure. Two, it has to break structure. So it's either of these two things. Okay, and I can then know how to work my way around that. So that's how I find supply and demand zones. You're going to be seeing me market markup charts and see um, how I read it. Now, the next thing there says I pay attention to structure, obviously, which is your um, basic foundational knowledge of trading, where you understand higher highs, higher lows, lower highs, lower lows. That's all that is. That's all about structure. And then there's something that I just watch out for, or something that I've come to experience when it comes to structure. It is just, I wouldn't say it is 100%, but it is something that I've created as a rule, since this is a call talking about my method based approach to the market. So there is a specific rule I use, and it is when major structure breaks. Okay, so this is the rule. When major structure breaks, I should expect a major reversal. Okay, so what I mean by that is this. Let's say, for example, we were bullish. All right. Now, in a case where this major structure breaks, which is in the case where this higher low has now been broken right there, that's the first sign of change in trend. Okay. And so, therefore, because of the fact that price is now, it is now bearish, right? Now, they they can't continue to sell it at a low price because this price right here is low. Okay, so they can't continue to sell it at a low price. So what they would do is create a discount or premium price, and that's what gives that major retracement. So that's the rule about structure, and that's what I use. Just this thing is a lot, very, very important, you know. So this is just one of the rules I use anyways, which is when major structure breaks, expect major reversal because then what happens? That gives you a lower high and then price continues to go bearish. So that's what happens. And I think some people would call this heads and shoulders or whatever you want to call them. So this is actually what happens, when price is trying to change directions. Either you see it like this or you see something like, something like this. Okay. It's all the same thing. So that's what I mean. Does that make sense?
Yeah, yeah,
Okay.
very much.
Okay. Yeah, a lot of people are just saying a bunch of shit. And what I do, you know, whenever I have people like this is I'll literally just kick you out. I don't even care or give a fuck who you are. So now that's just a warning anyways. So moving on. Um what I'm gonna do right now is just dissect, DXY and show you guys everything I just told you about. Okay, I know I didn't talk, momentum and liquidity is the next thing I was supposed to talk about anyways. Momentum just talks about how fast the price moves. Okay, that's just it. That's just it about momentum, how fast or slow. So if I see the speed, it tells me a lot about the fact that that is really healthy. And if I see the weakness in the movement, then that is unhealthy, and that is weakness. And there's a rule about supply and demand which says when supply is greater than demand, price continues to fall, and when demand is greater than supply, price increases. So there has to be that relationship, and the relationship is seen on the charts by the candlesticks. Okay, when you're able to read price. So the next thing there is liquidity. Now, liquidity is every high or low of any movement in the marketplace. Every high or low of any movement in the marketplace. That's liquidity. Now, liquidity in the layman terms just means money. All right, it just means money. So money is liquidity. All right, and money is what is spent to push price. Whether up or down, money is always spent. So every high or low point in price, every high or low point. Now, what I mean by that is this: every high or low point in the market, all of them, there's money, the orders, literally, the supply and demand orders sitting at every high or low in price. Okay, so there's supply right here, and that's why you'd see price reject and sell. Okay, and then there's demand here, and that's why you see price get in there and go bullish. Okay, so there's a relationship between supply and demand, by understanding liquidity. Make sense? All right, cool, cool, cool. So let's go deep. Let's go in. Okay, so now first thing I'm gonna do, I'm gonna go on a much higher time frame. Okay, because I really love the bigger picture. I really love to understand what's happening in the long term perspective because I like to swing as well. So looking at structure, we had a high and we had a low, right? Now we had a high, but now this high is not higher than the previous high. It is lower, which makes it a lower high. All right. Until therefore, what happens? Price breaks the low, and then we have a lower low. So here we have a bearish market. Okay. First thing, structure. Now, next thing I'm going to look at is momentum. So they both have to be hand in hand. If I see structure and momentum both in the same direction, I really love it. But if there's disagreement between both of them, then I really have to be very much careful about reading the structure. So what that just tells me is I can literally just calculate how fast price moved from this high point to this low point, and it took 27 bars, you know, and then I can also calculate the speed it took to go bullish, and here we see we took it took a lot more time. Even when it's not higher, it still took a lot more time. 3,200 days, 2,400 days, So there's a lot more bearish momentum than bullish momentum. Okay. Now you can also check out the next one, which is from the high to the low. We have 26 bars, and this we haven't even broken the high, and we'll pass 26 bars. We're at the 52 bars. So there's weakness and bullish in demand, literally, which just tells me that structure is bearish, momentum is bearish. So I should look forward to, if I'm trying to look at the long term perspective, understand that price is headed for supply zones. Okay, and supply zones that would be a discount or a premium price of a swing. So what I mean by that is, this is a swing, which is our lower high and our lower low. Now, this is our current trading range. That's what price is currently operating within the relationship of supply and demand. Now, like I said, remember what I said, liquidity is at the low and top of every movement in price. So there is supply here and there is demand here in the market. So there's going to be a relationship between supply and demand within structure. Just as here, liquidity was taken and this is demand, there's a relationship between demand and then this week to week there's a supply base in there. Now this is the relationship between supply and demand, okay? Because there has to be equilibrium. So if they're ever going to sell it at a much higher price, they would want to sell it at the next supply zones, okay? At the next nice supply zones. So that's just what I wanted to bring to your understanding. So I'm going to mark out the demand zone here, and I'm going to mark out the supply zones here as well. So the demand zone, like I said, it has to take out liquidity. Okay. So for me, it's usually the last candle. So I understand that there's liquidity here and it created liquidity. So this entire candlestick is our current demand zone because that was the last candle that created the structure and took out liquidity. I know you can't see anyways, but just understand that it did take out liquidity. Now, there are ways where you could literally minimize and get this accurate area, and that's by going into the fractals because the market is fractal. So going into the fractals and still using the same concepts, but seeing the fractality when you go in different time frames. Okay, so this is going to be demand. Now I'm going to do the same to the top of this move because this started off the structure. Now it has to be the last candle that took out liquidity, and by what I see in the market here, I can see that this high, okay, that high right there, you know, was taken by this particular candle and price never went above it. So that candle right there is my supply zone. Now there's a reason behind this concept and I'm going to explain it. I think I've already explained it anyways, but I'll just maybe share more light on it anyways. This, the reason why I picked this candle that takes out liquidity is because of the fact that that's where every sell order is in. That's where all sell orders are in. That's where all supply orders are in. And when price gets there, it's going to activate those supply orders and price is going to sell. When price comes here, there are buy orders in here. And when price comes here, it's going to activate buy orders and you're going to say go bullish. You're going to see me show you a lot of these things even within the fractals as we continue to go on. Okay. So now where did current price leave? Current price just left demand, right? So what we can do right now is follow structure from our demand zone, follow structure and momentum to understand what's going on. Okay. So I remember saying how I could minimize the zone and get a much more smaller, point of interest. So I can go back into the monthly now. So on the monthly here, I'm allowed to reduce my period high to this. because this is now the countdown looks a lot more better. And you see when price gets in there, there's the straight fall in price. Now this one, I'm going to reduce it to this guy. And then you see liquidity was taken, structure was created. Now that's on the monthly chart. Let's go to the weekly. So here on the weekly time frame, I can see how this is the last candle that was formed. And then you have the reaction because this is demand. Okay. And then you have the reaction from demand and then price goes bullish. So now we've just texted the proximal line of demand. We're also going to look at structure and then we're going to understand what's going on. So what I want to use, okay, I think the weekly is okay to, you know, check out for structure. So I'm going to check out for structure when it hit the demand zone, you know. So that's where I'm going to start. So my low was here and this was our high. So that was our trading range at that point. And at this point, um, the momentum was actually very strong, and the momentum here was really, really weak. So um, what most likely happens is price usually comes back to that zone, to that break, where it broke it, because he has to find balance. He has to find equilibrium. It's like your, it's like retail traders using just support and resistance. When you have a line, say to do something like this and say, that's my support. Oh, look at that. It actually happened, just like I explained. So price has already done that anyways. So I'll go into it. So price has now broken the structure high right there. Okay. So now it means we're gonna have a higher high. Now we can't pick this higher high because it didn't give a retracement back to breakage point. We can't also use this because it's not even higher than this. And then we see this one, and we can see the momentum. All right. So that is now a valid higher high because it broke structure. It broke minor structure. Okay, so that's valid. And because price broke minor structure here, what happened? Remember the rule I told you guys before I started, which is the rule of structure. When major structure gets broken, expect major reversal. So it can't possibly break this high because it was broken a major low. And what would happen is price would go into the supply zone, and then you have the sell orders activated for your sell to go on. And so because you know how to read structure, you now understand that there's a very high chance that price will also take out this low because we're now trending bearishly. All right. And then the question would now be, is there any reason why we need to even come here? Yeah, there's a lot of reasons because we have unmitigated demand zones up here. And two, we currently, this is our current trading range right here. Okay, this is our current trading range right here. Our higher low, our higher high. So what we need right now is a higher low, and so they need discount or premium pricing for them to buy because they have to buy at a lot cheaper price. They have to buy the asset at a lot cheaper price. So that would mean we'll likely see a demand action anywhere around the zone, anywhere, it could be anywhere. And then that's where price is gonna, you know, if it wants to maybe go bullish again to give us a lower high, it could, you know. But there's most likely going to be a demand movement from around the zones. But now we now understand what to expect, from reading structure. And this is just how I apply my method, when it comes to reading price action. And I don't really want to keep it, I don't really like to, have too much money. I just really like to keep it very simple. So this is a high high, and so we are now looking for a pending higher low because we don't have a higher low just yet. Or we just have a minor structure movement. So we've just broken the structure right there, which led to minor structure lower high. Now, if you guys remember, I spoke about how Price always comes for what takes out liquidity, and creates structure. So that's how I have my supply valid zones. And now you can see from here that this liquidity was taken, and so price would focus on the candle that took it out, you know. You can also reduce this as well. So I'll go into the weekly. So that would be the last candle right there. And you can see a test into that zone. Now, when I see a test like this, I just know that that's going to be liquidity, and I'm expecting price to take out this liquidity and then short, because that's what's going to create structure. And that's how price moves, right? That's how the whole thing moves. So that's how supply and demand can, you know, understand themselves. So you now have your supply orders being activated from your supply zone. You know, I could also even reduce this when I go into daily as well, and I'll have a much more smaller point of interest. But I usually do not go lower than the daily, anyways, because I'm not really looking to get the highest entry. I'm just looking to catch the move to the downside. So this will be it right here, and you can see a test into it, which is what makes it a lot more valid and makes a lot more sense as well. And then you can see your orders get activated in there. And what happens? You have a supply action. Now, if you go back on the monthly time frame, right, you can now see that we're currently being controlled by supply after taking out liquidity. Okay, so the current order flow is bearish. All right, so there's a very high chance that we would break out this low and then come to fill up all these unmitigated demand zones. All right, which is where we have our discounts and premium prices, or even go as low as taking out liquidity that we have here, because we have relatively core lows somewhere around here. You know, so price could keep going down in a long time, but it most likely might not go in a straight direction. As we all know, price moves in waves, so it could break and still go bullish, maybe give a lower high and maybe break again, and then before it continues to go bullish again, if it wants to, or not. So um, I think I had a setup before, which I have planned out for the week, um, and I'll show you guys what I was going to do in a moment. But before I move on, let me see if you guys have any questions. Okay, so someone has now. I see someone. Someone said the voice is good. Sorry about that. Any questions before I move on? All right. So since there are no questions, I'll just move on here. So what I'm going to do is just highlight, my strong demand zones. So again, it takes me back to my rule. My rule about finding a demand zone are two rules. One, it has to break structure. Two, it has to create structure by taking out liquidity. Okay. So the first one, which is break structure. Now I remember what I can see from here is I have two structure points. I have this one and I have this one. So these are two structure points. But this is going to be a minor structure point in this case. But it is a structure point. Okay, so what I know is demand broke supply. Now the reason why I say that is because, and the reason why I look at structure points and I take them significantly is because of the fact that they are supply and demand zones. Again, when I say every high and low of price action or price movement is supply and demand and there's liquidity. Okay, so this is demand. This is the previous supply zone. We took out this liquidity, this high right there, and then went bearish. So price is back here, and there's a breakout of it. So the one that I would really like to respect the most is the one just before the break, not within the break, but just before the break. That's the one that will be most significant for me. As you can see, look at the reaction again. So it's just to show you that it's just straight up supply and demand in the market. And if you understand how to read it, then you know how to accurately pinpoint where you expect the reaction from, and then you read structure and momentum to get an entry. So the point which we've been able to find out this much stronger one that make a lot more sense would be the one that took out this high. So the one that took out this high, we can also see a test right there. Okay, so it's going to be this week, 2 week. What I'm going to do is go into the small time frames until I find the exact thing I'm looking for. Okay, now the exact thing I'm looking for is something that takes out liquidity. And that's it. Um, Actually, it's been tested already, anyways, but that's it. So the fact that it's been tested, maybe you might have another test anyway, but it's been tested and you might break it because it's not fresh anymore. But that's where I would want to sell to, literally, or expect the next, because that's the next strong demand zone. That's the next significant demand zone. And then maybe if you want to continue to go lower, you can. But that's the next one. Now, apart from that one, if this one fails, then I'm not really going to look at this anymore because it was supposed to be this guy right here. But now, this guy, there's relative liquidity around that guy. So it just makes it a lot less, um, you know, strong for any action. Um, but let's face this one first. Now, if this is going to be a target, what I can do is sell to my target, and I obviously have to follow structure, so I'm on the right side, and I don't get on the wrong side of the market. Now, one thing that I will have you guys know is that it is very good. This zone right here, if you're trying to sell it, it's going to be very, very risky. And you know why? It's going to be risky because that's the demand zone that you're in right now. All right. And the reason why it's a demand zone, obviously, it is at the start of structure and it took out this liquidity right there. Okay. And this will be the candle, and this is the current demand zone. So the current demand zone, we've tapped up 50% of it, which is the discount price. Okay. And that's where we're having demand action. All right. So what I can do now is literally go into the small time frame to get exactly, you know, where the current supply and demand zones are as regards structure. Okay, so that's how I know what I need to do. So let's go to the weekly. Now I'm going to go in from fractal to fractal. Now on the weekly, what I'm going to do is keep out the demand and not ignore it because I could find myself a possible hedge position. All right, just to be safe, and so I don't just keep all my bars to just one direction. So that's the last candle that took out liquidity, and that's the current demand zone, and that's why we're having demand price action forming there. Right? I'm also going to reduce it when I go into daily and then the 4 hour and then the 1 hour until I come onto something that I'm satisfied with. All right. So I'm going to reduce this now to this particular candle because that's the last candle that took out liquidity. Okay. And this is the test and the sign. We have this perfect mitigations from there. So let's see exactly. We have another pinpoint mitigation. Now, what I can deduce from this is the fact that you know there are still demand zones in here, demand orders that have not been tapped off, and you would understand if I start to go into the 4 hour time frame, you're gonna start seeing unmitigated demand zones within this area. So that's how I know that this isn't just the start of a bullish move. But what I can do is follow structure from the reaction. It's the reaction I need. So I'll go on the 1 hour from the reaction, and that's how I'd follow structure to get into the buy. So this is how I would have known to sell EU, about 2 weeks ago by following structure from the reaction. Now, prior to when price reacted to this low, we had structure points. Okay, we had this high, we had this lower low, and this was the lower high, and then this would be the lower low. Right? So what happens next? Price fresh stuff. Now there's something I call scalp breaker structure, which is the initial sign breaker structure of minor structure. Now when I see it like this, you know, for me that's minor structure. Now when I see it happen like this, I'm going to look out for another thing, which is this. Did it break? Um, did it? How's the momentum like? You know, what's the speed of the movement? And if you look at it, the speed of movement is a lot, very significant. You can see how healthy the demand candlesticks are, right? And not only did that happen, but price broke. Like there was literally no, you know, no reaction from supply because that was the last candle right there. You can see this weak out. So that just shows me exhaustion in supply. And then what I can do is wait for the next entry, which is higher low, to start to form and then catch the move. So what I'm going to do is, again, pay attention to the last candle that took out the liquidity. And that would be this candle right there. So now that's where I have my interest from. So you would apply this on EURUSD. Obviously, you can't trade this one anyways. But you apply the knowledge to USD. It doesn't matter even if you hit here. There's so many other entries, opportunities right here, especially when liquidity was tapped out. That was like the sign that I would know that okay, yeah, it is now ready. And I would see like a 1 minute break of structure and bullish momentum. That would show me, you know, the price is going to go the other direction, and then I would sell EU. Okay, so now what we can do from this right here is follow the current structure. So what we did was price created a new high, right? Because you had a higher low. You had a lower high, a lower low, a higher high. Okay, make a structure. Now price would need a discompress, which is 50%, and then you have a tap of 50, and price goes bullish again. So that is a higher low. Okay, and then you can follow. You can see how structure keeps getting respected. Higher high, higher low. And liquidity is also grabbed to create structure. The rule applies every time frame, every time. Okay, and then higher high. All right. Now this is our current trading range: higher low, higher high. All right. This is our current trading range: this low and this high, and you can see that we are still bullish. So what I can deduce from this right now is understanding that my demand zone is going to be right there, the one that took out liquidity. I think that's the secret. Okay, the last candle took out liquidity, and so I would have this candle right there. Okay, and you can see that we're just literally tapping on the proximal line, and you're seeing that demand action, right? But what that's telling me is it is literally just created a lot more liquidity, and reasons why when it comes down here it can create structure and go bullish again. Okay, because when liquidity is taken, it creates structure. So the higher low, the bullish movement could continue from this demand zone. And so therefore you can now apply this to EU, GU, whatever trade you guys do, whatever place you guys do. You know, so what I like to do is always reduce risk, and I don't really like to have, you know, high POIs. So the minimum I usually go within is 5 minute and 15 minute when I try to reduce my point interest. Um, okay, so someone's talking about would that candle be like a spring within accumulation? I didn't really use week off. Okay, I didn't use week off. Do you still count structure as sideways movements? Do you still count structure as sideways movement? Structure is lower high, lower low, higher high, higher low. That's structure. It's not sideways movement. So now this is the candle right here on the 15-minute time frame, that took out the liquidity. Okay, so for me, that's going to be like the demand zone. And what I can do is I don't even have to do anything but set an alert, wait for price action. If I see bullish price action break my scalp structure, which is my minor structure, I'm going to buy the higher low, and then I'm going to be in the continuation of the bullish move. Okay, so that's how I'm going to do it. Literally. So that's how I read, you know, price by using supply and demand and structure. So guys, does it make sense? Yeah, there was something I think I missed out, because I always like to look at both angles, which is the buy and the sell. So I've looked at the buy possibility. Now what I'm going to do is also look at the sell possibility, you know. So because I felt like again we might continue to go bearish, and we just need to align with structure and supply and demand in the right direction, to continue to go bearish. Also, um, this candlestick is going to close in 5 days, which is most likely going to end up in like a base form, and the base is like my supply or demand zone. So this could be the last thing that's created to break this demand zone, and then that becomes significant as a supply zone where price could react from again. So that is likely. This is where you can apply week off and say, okay, that's going to be like a redistribution if they want to continue to sell. All right. Again, I don't use week off, and the reason why I don't use week off is because if you understand structure, you don't need week off. If you understand structure and momentum, you don't need week off. Um, all right. So because of the fact that I like to look at both ways, I'm going to pay attention to these highs right here. Now, these highs, I know that they are liquidity. Okay, so what I mean by that is there's liquidity here, there's liquidity here, there's liquidity here. Right. Now, for me, these ones in particular are closely like they're too close. Right, they're too close, and which means there's just a lot of orders in here. There's also this one, anyways, but this high takes it anyway. But there's just a lot of orders here. And let's not forget this one as well. So I'm thinking the price would take out these excessive orders, which is excessive liquidity, to if the because obviously if this is going to be a redistribution, they would want to sell at the highest price, which is where you have your UT or your UTAD from. And your UT or UTAD creates structure. And again, for structure to be created, liquidity has to be taken a significant amount at that. So I'm thinking that price will take out this significant liquidity and then give us that UTAD or UT to create the next sells. So these buys are going to lead us to, probably have something like this, take out them and then go back down, and then that would be your redistribution schematic, something like that. You know, now this is just a theory. There's no way that this is just what's going to happen. Okay, this is just a theory. Right? It's not anything. So the only thing I can do is follow structure. Now, when I'm going to exhaust my buy positions or my buy bias is when this structure low breaks, because immediately I see that happen, then I know that there's going to be a major reversal, which will take out this liquidity here and give us a lower high for the next sell. Okay, but until that happens, I have to be on the path, the structure, and that's how I catch the right moves. So I don't really have to worry about the sales for now. I can worry about them later when price breaks the high. So that's how I, analyze the markets. I hope it was of some sort of value. And this method of approach and this trading system applies to every currency. Uh, Yeah. And the reason why I said you don't need week off because week off is literally just with structure and momentum. That's just what it is. It's beyond AR, SE, UT, UTAG, blah, blah, blah. It's beyond all this shit. Do you stop at a certain time frame to look for the lowest power candidate after calculating when you search for your zone? I have like a certain, I have like a specific time frame I follow. So how I do it is 3 months, 1 month, 1 week, 1 day, 4 hours, 1 hour, 15 minutes, and a 5 minute. That's how I do it. And then if I want to get my entries, 1 minute. But that's how I arrive to my point of interest. How big is your average stop loss? 5 pips. 5 pips for now. I wouldn't really say 5 pips. I'd say um, it depends on the pair because I trade gold a lot. Gold is actually my go-to pair. So gold is like 5 to 7 pips, but for pairs like EU, GU, they're like 3 pips, 2 pips, 4 pips. Yeah. So that's it. Um, so if you also check out EU, what we just analyzed right now, you guys would see the correlation because we're looking at EU trying to, buy, and then we're looking at DXY trying to buy, and then we're looking at EU trying to sell because EU is also taking that bearish momentum. It's just the same thing that I did, you know. So that's what I'm just waiting for and preparing for. And then we'll see what happens when the market opens. Can I explain this process in another pair? Do you go to small time frame like 5 and 3 or 1 minute? Yes, I use small time frames. You can see them here actually. I have 1, 2, 3, 5, 15, 30, 1, 4. You can see my time frames. Someone asked about doing this on a different pair. Okay, you guys give me any pair that's not here and it doesn't have to be GJ. First pair you guys talk about and then I'll analyze it. Now it doesn't have to be gold as well. Okay, CAD GPY. Oh, this is a very old analysis. Okay, now let's go. All right. So, you know, the same method of approach to the market. Will this recording be available? It will be available to the students, but it wouldn't be available publicly for copyright reasons. So there's a breakout. That's a breakout. Okay. No liquidity grab because you had previous structure low and you had previous structure high. Okay. Now you have a break of structure and you see the momentum very strong. Okay. Now price takes its time to go bullish, right? But what it does is, it goes a lot higher. But now we haven't broken the low, have we? No, we haven't, and that's gonna raise eyebrows because why? Why is price struggling to break this low? You know, because what would have expected would be if we give us a higher low, a lower high, it was meant to break this low. But then there's a struggle, and the struggle just talks about how demand is a lot stronger right now, and then there's a lot of demand order flow that is pushing price. So what you can do is follow demand and follow structure, and then follow the move. Okay, follow price wherever it goes. Don't try to think for it. Trade what you see and what you think. So now this is not a lower high just yet because it hasn't broken any structure point, any major structure point. So therefore, it is just a liquidity void. in this case. Now, secondly, the next supply zone is right here because that was the last candle to cut liquidity. Okay, and we haven't tapped it at all. All right, you guys can see it. Now that's supply. Now demand is right here because that was also the last candle I took out liquidity. And then what you can see from here is evidence of demand. Literally, that's just what all of this is. Demand and supply. Price moves from demand zone to supply zone. That's how price moves. Okay, because there is always a relationship between supply and demand. The price to move low or high. So now there's a much better way to reduce this and get exactly what's controlling these lows and then understand it and add it with structure. Okay, so from this low, I'm not going to neglect structure and I'm going to pay attention to it as well, which is the minor structure. So the minor structure here is we had a high, which I can use in a different color and say red. Okay, and then that high gave us a retracement, which is going to be a low, right? Now, the high low gives us another high. It's going to be the high high. Now, the high high is technically giving us a higher low right now. Okay, now this higher low is going to be confirmed when structure breaks the previous high, which is going to be this high. So the moment there's a break above this high, then just understand that KGPY is going to take long movement all the way back to the supply zone and then take out liquidity if it wants to create structure and sell. Okay, so we're going to analyze what demand zones are in our fractals and then follow structure to understand what kind of trade we need to take as we continue to go on. So I'll go to the monthly and I'm just going to be paying attention to that particular candle. So monthly is there. Let's have weekly. Let's reduce it a lot more. Okay, so I prefer this one, and then we have that tapping, and then we have that perfect tapping, which just led to bullish movement in price. Okay, probably just check out daily. Usually, I just need to have 2 over 3 aligned most times when I'm trying to pick my supply and demand zone. So I don't have to take it too low and miss out on certain moves. Okay, so I'm going to use this one now. And it's not a coincidence, even if it doesn't get tapped off, because it did take out liquidity, and so it has to get tapped off. So that could be for later, and you could have those lows as liquidity voids. But we're going to follow structure. Yeah, exactly, you could have those lows as liquidity void. Now, this is why I said, I like to go deeper into time frames and understand what's happening, because what I'm starting to see now, from this low, again, this is not valid yet because it hasn't broken the high. So not until this high breaks before I would be certain that this low is going to stand for any bullish move in the long term. All right. Now, this is our current trading range. Okay, we were bearish. Okay, we were bearish to the demand, and this is our current trading range. So I'm going to pay attention to our current trading range. Hopefully that makes sense. Okay, so that's our high and that's our low. Now we can see that price has already established, premium price, which is 75%. So what I can do now is figure out supply zones where I could likely have sell from. And who knows, price could dump back down and respect structure. Okay. Now talk about momentum as well. This is very weak compared to the strength of this movement. This is very weak. Okay. So there's a very high chance that price could short. So again, you guys remember my rules, yeah? My rules about picking my supply and demand zones are: one, either break structure, either has to break structure, or two, it has to create structure. So if it's not this high, it has to be what broke this last demand zone. right there. Okay, so there's something somewhere around here that has to, break it, and it would be in the fractals. So check 12R. Have this, because that was the last thing that's formed. Have we tapped it? We haven't. Okay, check the 6R. Okay, something else. This before R then. All right, perfect. That's what I need. So yeah, that was the last bullish move before bearish move, which is what makes it significant for supply zone. Okay. Also, that's a drop based drop. In case if you're new to this concept and you don't understand supply and demand, I can also show you something in the fractals about that as well. Yeah, perfect. Reduction. So in case you're wondering if it took out liquidity, yes, it did. Okay, because you have that high right there, and then you have that candle short, and you have bearish move. And look at the health. Look at how healthy the move looks. Okay. I remember also seeing something right now. There were two zones I saw within that area. I saw two different zones. The second one was interesting because that's how I pick, my valid zones. So is it not going to be this one or that one? Yeah, it's going to be this one. Okay, so the first one has been tapped off. Yeah, that's what I saw. So whatever broke demand, because this was demand before, so whatever broke demand is where price is going to use as supply. And so you can see that we've literally just tapped off the nearest one, the nearest supply zone, and it's a valid supply zone. So what you would understand if the supply is going to be valid and if it makes sense for you to sell or start having short positions is when you have a break structure. I actually like using the 1 hour anyways to read that, but it's the same thing. Yeah, I want to see this. I think what I would have caught this move anyways would have been from somewhere around this high anyway. But there's still that opportunity where you can have this and then you have a sell. And maybe you can now call this a distribution. Again, I didn't do week off anyways. I just look at structure. All right. So, that's how I can apply both. Momentum is looking very strong actually. You know. So once this low breaks, understand that KJPY is gonna dump. Until then, we can't say for now. Because there's still unmitigated supply zones. Now it doesn't mean that every supply zone has to be mitigated. You know, there's no, specific. And um, if I also even look at this here, when I look at the outer structure, let me actually look at the outer structure on the daily. You have this low, you have this break. So there's a minor high, and there's a minor low, and there's a minor high, and there's a minor low. Not until this high breaks, then you'd have a minor high. So it's not this one because there's no bearish move yet. So technically, we don't have a minor high yet until there's a break in structure. So if there's a break in structure here, then this is going to be a higher high, and then it would be safe to take sells to at least discount of that swing. So to at least 50% of the swing. So your TP1 would be to this low, At least if we're taking any cells, that is if you have a bigger structure from the reaction of supply. Okay, so that's how it play. Make sense? Because I think every liquidity void has to be captured to create the next structure. Anyways, it's just excess liquidity sitting. So you might take out liquidity and you have structure being bearish right here. So we just might be at the next lower high for sales to show up. So I have questions here. Do you use breakers? No, I don't use breakers. Why did you take a buy? I took a buy because the structure at that point was bullish. Okay, someone asks, but by doing this, you only take trades when it comes to your daily or higher time frame zones, or do you do the same for small time frame? I like to look at the market as a storyline that unfolds itself. So I just play my entries and exits as the story presents itself with structure. What is order flow in your opinion? Order flow is um, price moving from demand to supply, and demand to supply, and demand to supply. That's order flow. You mixed S&D with SMC. I didn't mix S&D with SMC. What's SMC even? Smart money concept. What is smart money concept? That doesn't exist. There's nothing like smart money concept. It's just something someone created. Yeah. So yeah, guys. I hope this added some sort of value. Um, so I'll probably see you guys on the next future call. So I'm signing off from here. Have a great week. Have a great year as well. And take care. If you ever want to reach out to me on any social media platform or privately. Here are my handles. So my IG is right.
Thanks, Derek.
Welcome, guys.
Thank you, Dirt, bro.